Hey, good morning everyone. My name is Ram Dhamija. Welcome to my channel. It's been a good week ending yesterday with the RBI policy rate cut that came in, and it has cheered up the markets, and things are looking very, very good in the markets right now as we speak. And Bank Nifty made an all-time high. Yet again, the third one it made in a matter of a month. Three times it has made a new all-time high. Financials are doing really well, and the markets is in a cheery mood. And I'm going to discuss all of it. What are the implications of the rate cut on the market, and how I see the market going ahead, and what to look forward to for the coming week. So all of this I'm going to discuss today in my video. So let's begin with how the markets are looking right now. And I will start off with the Bank Nifty chart. So this is the chart that was there yesterday. As you can see, we opened up pretty much, all near the all-time high at 55,800 odd. But then, came the rate cut news at about 10:15, and look at the movement over there. Just went up one way. It just shot up, and it broke the previous highs of 56,200 odd, which was this blue line that you see over here, and it is comfortably now trading above it. It made a high of about 56,700 odd. So one thing is very clear, that the banking stocks, I have been mentioning this for the last almost 3-4 months now in all my videos, that banking and financial stocks did not fall that much in the correction of April, and they were the first ones to lead. And as we have seen before, that Bank Nifty made an all-time high, whereas Nifty is nowhere. It did not even touch it. Bank Nifty made it 3 times, but Nifty did not even touch it once. And now this leg of the rally is being led by banking and financials. It was very, very clear. It's been clear for the last almost 4-5 months that banks are going to be the next leaders of the bull market. Not only banks, the entire financial space, be it the capital market space, which was part of the last bull market as well. Uh, Including the AMCs, brokerages, wealth managers, and so on. Then NBFCs are making a comeback. Private sector banks are making a comeback. PSU banks are the only ones which are a little bit lagging behind, because they were the leaders of the last bull run. But all the other financials are doing really extremely well. So that is one very good news. And anyone who is invested in financials would be doing pretty okay. Me, for one, I have overexposure in financial sector. So that's working out all right. Now let's come to, this is the daily chart of the Bank Nifty. Now let us look. So this is what I was talking about. This was the previous highs. So we touched it, first time we touched it on 23rd of April. Okay, then we touched it on 3rd of June, and yesterday 6th of June we broke it decisively. So as you can see, that Bank Nifty is in a good shape, and even on 7th of April, if you see, it did not break the previous lows. The previous lows of 47,600. Even on 7th of April, when Nifty made a new low, Bank Nifty was at 49,000. Now this basically shows the strength in Bank Nifty, and now it is broken at the all-time high. Now it's all blue skies, because there is no resistance above this. This is the new all-time high. So let's see till where we will be head in Bank Nifty. Now coming to Nifty, this is the Nifty chart. Nifty, again, we have broken a crucial level of about 24,800 decisively. Now the next one is 25,200 odd, which was 130 odd actually, which was the last high, where we have been stumbling for a couple of times. Now first we made this on 15th May, then we tried to touch it on 26th May, but then we have been having a correction. So basically, if you see this candle of 12th May, this was when the ceasefire news had come, and we have been in that particular range for almost a month now. So this was a huge 4% move that happened on Monday, and we have been kind of in that particular range. So is this the trigger to break this range? We'll come to know. And I have been maintaining that once we break this 25,100, we are going to see 26,200 pretty soon, which is the last top of Nifty. So Nifty is also heading towards the all-time high. Now if you look at where the indices are placed with respect to the all-time highs, Bank Nifty, Fin Nifty, private banks have already made all-time high. Mid cap is at minus 2.9%. So mid cap is almost there. Minus 3% is almost there. Nifty is minus 4.85 from its all-time high. PSU banks minus 6.2. Pharma minus 9.3. Nifty next is minus 12.7. FMCG minus 16, public sector enterprise minus 15. Now the ones that have been really hammered are your momentum and alpha, but they are also making a comeback. So momentum and alpha will start to rally once the new bull market comes in. They are typically the leaders of the bull market, because they are very high beta stocks are there in momentum and alpha, and that basically indicates that the bull run is well and truly on when these indices are actually surpassing the other indices. Now what is happening right now is all the large caps, banks, etc. are making all-time highs. So it is, if it is a bull rally start, then it is probably just the starting, okay? And once the bull rally matures, that is when all these momentum, alpha, etc. start to outperform. I don't think it's going to happen pretty soon. We are still some distance away, because just to give you an analogy, the last bull run started in March 23, and it was not till almost 2024 that all these indices, or late till 23, I would say, when all these indices started to outperform. And we know that the peak of the bull run was reached in September 24, and that is when all these alpha, momentum, etc. had far surpassed all the other mainline indices. So that is the nature of the bull market when it happens. So one must know, where one has to be invested, and uh, how to take advantage of all these indices. And you need to have seen 2 3 4 cycles at least to take good advantage of them, because typically what happens is bear markets come, people panic, they sell off their portfolios, and bull market comes, they try to re-enter it. It doesn't work like that. You have to have proper systems in place to generate that alpha over the markets, or at least have that good performance in terms of your portfolios as well. Either you be a buy and hold kind of a investor, but if again, it will depend on what kind of instruments you are investing in. So a lot of people, they fell for the quality narrative which was there in 21 22, and they invested in big large cap companies which have not done anything for such a long time, for 2 3 4 years. So whereas the entire bull market has come and gone, and it was happening somewhere else. So one needs to be very cognizant of the fact that where you have to invest. And that just reminds me, if anyone is interested in making their portfolio, mutual fund portfolio, they can contact me through the Google form in the description below. I help people make mutual fund portfolios, solid mutual fund portfolios, which will help you take advantage of the bull run and will protect you during a bear run. So if anyone is interested, please fill up that form. It's free of cost. Now coming to the next thing, how is the open interest placed? This open interest is also very interesting. So today when we opened, the open interest was at 0.6, okay, but by the end of the day it had gone to 1.06. So you can see there have been about 5 crore puts versus 3.84 crore calls written in Nifty. And if you look at the open interest, this is 0.98, so almost 1. 11 crore, almost 12 crore calls versus 11.5 crores put. So it's right matched up there. So a lot of puts have been written in the system. Calls are not unwinding, so calls are still heavy on 25,500, 26,000, but 25,000 has seen a lot of put addition as well, so which is a good welcome sign. So we next few days is going to be crucial in terms of seeing whether we are able to take out this 25,000 or not. Now what happened in terms of our straddle premium? The straddle did not decay much yesterday, so it was a slightly a tough day for option selling, because at one point in time there was good melt coming in the options, but as you can see, it was the straddle pretty much closed where it opened at about 350 60. It opened, it closed at about 335. There was some melt towards the end, but hardly anything. So no premium decay happened in the straddle yesterday, and so things are looking okay. So coming to the important point, what the RBI cut its rates yesterday, and what are the implications of the rates? I will take you through what are the implications of the rate. So there are some key implications. Firstly, that the lending rates are going to come down. So all your home loans, car loans, etc. will come down. Why does that happen? Is because when the RBI cuts its rates, the banks can lend more freely. They have more liquidity. The liquidity has also been injected into the system, and this is particularly good for a lot of sectors. So the sectors that are likely to benefit, one we have already seen, the financial sector is likely to benefit, banking sector is likely to benefit, because for the banks, their margins also improve. They have more, as I said, liquidity to lend. They have more incentive to lend. So that is there. It also serves as a good economic growth indicator. So it will boost consumption. So not only people will have cheaper home loan, car loan, etc. rates, but they also have an incentive to spend, because the value of money actually goes down a bit. So the spending also increases, the consumption also increases. So it's like a fillip to the entire economy. It's like a growth injection to the entire economy. And this time we have seen that RBI has gone all out in terms of injecting growth into the economy, which is good, which is great, because inflation was coming down. One flip side to two flip sides actually to cutting interest rates are, one is on the bond yields, and second is on inflation. Now, inflation is not a concern over here, unlike what you're seeing in USA, where the Fed is not cutting rates because they're very scared of inflation. Over here, our inflation print is coming down, so that is actually good news. So RBI doesn't have a constraint on that part. But the flip side to that is sometimes if loose monetary policy can lead to inflation, which is not a worry for us, which is great. And the second is the bond yields. The bond yields will tend to come down. The existing bonds are going to do well. Anyone who's invested in bonds, again, you really need to know when to invest, what not to invest. Bond mutual funds are a good way for people to hedge their portfolios. I've been recommending this to my clients for the last 6 months. Please invest in bonds, because the interest rates are going to come down, and once the interest rates come down, then your bond yields, your bond prices go up. So the yields go down, the bond prices go up, and that gives you a good CAGR growth on your bond portfolio as well. So, all these things, for a common man to know, it's very difficult. For a retail investor to know, it's very difficult. That's why you perhaps need a helping hand, to someone to tell you at least. Decision, of course, will be yours, but someone to tell you all these things. I try to do it in my videos, but a more structured way is that, I help clients to build their portfolio through mutual funds. That's a more structured portfolio way to go about it, the whole thing. So, as I said, anyone interested, the link is there in the Google form. Now, apart from that, what are the other things? Currency is one thing that we need to watch out for, because whenever the interest rates are lowered, the currency typically will tend to be slightly under pressure. But US currency, US dollar is already under so much pressure that I don't think that is also going to be a big factor for us. So currency should be okay. Anything else in terms of export competitiveness, we should be fine. Real estate will be fine. So I think it should be a very, it's a good step. It's a good step. There is no doubt about it. It's a good step. It's a great step for the markets. We are seeing the markets rejoice with it. But my only tip, sometimes my worry is that when all the good news is in the system, then either the markets will rally, or everything good is known. So. So any geopolitical shock or anything will result, because there's no other good news left. So sometimes it happens that when everything is too good, then sometimes it's too good to be true. So we just have to be careful about that fact. But no complaints, absolutely. Portfolios are doing fantastically well since the start of this year. After April 7th, things have been very good. The markets have really made a superb comeback. Everyone is happy. Everyone is feeling the effect of money in their pockets with their portfolios going up. So it's looking all good, and let's see how things pan out. So immediately for the next week, open interest is looking all right. So we'll have to see how Monday plays out. And banking stocks are on fire. So they are the next leaders of the next bull market. And I hope all of you have a good solid portfolio with you, which has exposure to all the good sectors like banking and so on, and you are able to see a good growth in your portfolio. So that will be my wish to all the viewers over here. So that's it from me now. It's been a good week, happy, contented, and let's hope that the next week is as good as this one. And I hope you like my video. I hope you like my content. If you do, please do subscribe to the channel. It motivates me. And please do share the video with your friends and family if you like the content. So that's it from me now. I shall see you soon. Have a nice weekend. Take care. Bye-bye.